Good day, everyone. Accounting is often described as the language of business, but in reality, it's a dynamic discipline that speaks many dialects, each tailored to a unique audience and purpose. Beyond just crunching numbers, accounting empowers decision making, ensures accountability, and reflects the heartbeat of institutions both private and public. Today, we'll explore the diverse branches that shape the profession, from financial reports read by global investors to budget plans guiding government priorities. Every branch has its own rhythm, some drive strategy, others safeguard integrity, while a few illuminate innovation and learning. Financial accounting captures the story of a company's performance, while management accounting helps navigate the future with insight. Government accounting ensures public funds are responsibly managed, and auditing keeps organizations honest and transparent. Tax accounting connects law to business, cost accounting fine-tunes operations, and education accounting supports learning institutions behind the scenes. Meanwhile, research accounting fuels discovery by managing grants and research funding with precision. By understanding each branch, you'll see how accounting is not just a career, it's a cornerstone of progress, woven into every sector and every decision that shapes our world. Here are the learning objectives for this topic. 1. To understand the unique roles and characteristics of each accounting branch, including financial, management, government, auditing, tax, cost, education, and research. Gaining a clear understanding of the distinct roles of accounting branches empowers students to appreciate how accounting goes far beyond simple record keeping. Each branch contributes a specialized function, whether it's financial accounting's role in external reporting or management accounting's strategic support for internal decisions. Recognizing these characteristics helps students connect the theory of accounting to real-world applications across diverse sectors. This foundational insight equips learners to navigate both the private and public spheres with confidence and context. Ultimately, it fosters critical thinking about how accounting adapts to meet various organizational goals and societal needs. 2. To analyze how the various branches of accounting interact within organizations and contribute to effective decision-making and accountability. Analyzing how accounting branches interact reveals the seamless collaboration needed to keep organizations financially sound and ethically guided. For instance, financial accounting may provide the figures, but management accounting interprets them to drive strategy, while auditing ensures those interpretations are grounded in truth. Government and tax accounting work hand in hand to ensure compliance, funding, and responsible governance, especially in public sector entities. Education and research accounting support institutional growth by managing academic budgets and project-based funding with discipline and foresight. Understanding these interactions cultivates a holistic view of accounting's role, not just in calculation, but in shaping transparent, informed, and responsive organizational choices. 3. To create thoughtful comparisons, visual aids, or case-based narratives that illustrate the practical significance and interconnectedness of accounting disciplines. Encouraging students to create comparisons and case-based visuals helps transform abstract accounting concepts into vivid, relatable understanding. By mapping connections between disciplines, such as cost accounting supporting management decisions or auditing reinforcing financial reporting, learners begin to see accounting as a system of collaboration, not isolated tasks. Visual aids like Venn diagrams or flowcharts spark cognitive engagement and deepen comprehension, especially for complex interactions. When students build narratives grounded in real organizational scenarios, they practice empathy, logic, and creative problem solving. This objective cultivates not only technical proficiency but also storytelling, a skill essential for communicating accounting's value across sectors. The branches of accounting include, but are not limited to, the following. 1. Financial accounting. Financial accounting focuses on the preparation of financial statements that reflect an organization's performance and position over time. Financial accounting tells the story of a business through numbers, presenting how it performs over time. It captures revenues, expenses, assets, liabilities, and equity in structured formats. These statements offer a snapshot at specific intervals, helping users interpret financial health. Transparency and consistency are key to ensure comparability across periods or entities. The result is a coherent narrative that reflects economic reality. These reports are primarily aimed at external users like investors, creditors, and regulators. Financial statements are designed to meet the needs of external stakeholders who don't have direct access to internal data. Investors assess profitability and growth, creditors examine solvency and repayment potential, and regulators verify compliance. The accuracy and clarity of these reports build confidence in the organization. Each user group applies the same financial data differently, depending on their interests. Ultimately, the goal is to foster informed decisions and trust. It follows standardized principles such as IFRS or GAAP to ensure consistency and transparency. The use of standardized frameworks like IFRS or GAAP ensures that financial reports are consistent, comparable, and reliable. These principles define how transactions should be recorded and disclosed. Following such standards enhances credibility and reduces ambiguity in interpretation. It also allows global investors and institutions to evaluate companies across borders. Without these standards, financial reporting would lack structure and integrity. Core tasks include documenting transactions, preparing balance sheets, income statements, and cash flow statements. Financial accounting begins with meticulous record-keeping of business transactions. From these records, accountants compile the key financial statements that summarize performance. Each report plays a unique role. The balance sheet reveals financial position, the income statement shows profitability, and the cash flow statement tracks liquidity. Together, they provide a holistic picture of the organization's fiscal state. These documents serve as the foundation for stakeholder analysis. Financial accounting helps stakeholders assess the viability and profitability of a business. The ultimate purpose of financial accounting is to inform judgments about a company's sustainability and success. Whether it's investors eyeing potential growth or lenders assessing creditworthiness, the data provided is critical. Historical performance and trends offer clues about future risks and opportunities. These insights guide financing, investing, and regulatory actions. In this way, financial accounting becomes a strategic tool for shaping business decisions. 2. Management accounting. Management accounting provides internal insights to help decision-makers steer the organization effectively. Management accounting serves as the organization's internal compass, helping leaders make well-informed choices. It synthesizes financial and non-financial data to guide actions aligned with strategic goals. Unlike external reporting, its insights are customized for internal relevance. This allows managers to respond swiftly to changing business conditions. In essence, it's about turning numbers into direction. It includes budgeting, forecasting, performance analysis, and strategic planning. This branch thrives on planning and control, ensuring resources are allocated wisely and goals are achievable. Budgeting outlines financial targets, while forecasting predicts future trends based on current data. Performance analysis evaluates how well operations align with expectations. Strategic planning ties all of these together to shape long-term direction. These tools empower managers to adapt and innovate continuously. Unlike financial accounting, management accounting is more flexible and doesn't follow strict external standards. Unlike financial accounting, management accounting is liberated from rigid frameworks like IFRS or GAAP. Its reports can be tailored to suit the specific needs of departments, projects, or leadership styles. This flexibility encourages creativity and responsiveness in reporting. Timelines and formats are based on usefulness, not compliance. It's a discipline that answers to effectiveness, not uniformity. It enables managers to set goals, control operations, and evaluate business strategies. Management accounting enables leaders to define measurable objectives and monitor progress across the organization. It equips managers to detect inefficiencies, allocate resources effectively, and adjust strategies when needed. Operational control is enhanced through variance analysis and key performance indicators. Strategic evaluation ensures decisions support long-term growth and sustainability. It acts as both a microscope and a compass. The emphasis is on relevance, timeliness, and actionable information. The value of management accounting lies in providing the right information at the right time. Reports are designed to be concise, targeted, and easy to interpret. Outdated or irrelevant data is avoided, fresh insights take center stage. Actionable data ensures that decisions are based on what truly matters, not just what's available. This makes management accounting indispensable for agile and effective leadership. 3. Government accounting. Government accounting deals with the financial administration of public funds and the activities of government entities. Government accounting is responsible for recording and monitoring financial transactions within public institutions. It ensures that allocated funds are used according to approved plans and policies. This branch supports efficient resource distribution across sectors like education, infrastructure, and public health. Accuracy in tracking these activities promotes responsible governance. Ultimately, it helps uphold fiscal discipline in service of the public. It ensures accountability, transparency, and compliance with budgetary and legal requirements. Transparency is vital in public finance, as government agencies are entrusted with taxpayer money. Government accounting helps ensure financial activities are reported openly and aligned with legal mandates. This builds public trust, deters misuse, and facilitates oversight by bodies like the Commission on Audit. Accountability is demonstrated through proper documentation, regular audits, and compliance reviews. When followed diligently, it becomes a safeguard for integrity and equity. The focus is on tracking public revenues, expenditures, and stewardship of assets. By monitoring income from taxes, fees, and grants, government accountants keep a close eye on available resources. They also manage spending related to public programs and services, ensuring every peso is tracked and justified. Asset stewardship involves maintaining records of government-owned properties and investments. This holistic tracking ensures that governments maintain solvency and operational efficiency. Clear records support budget planning and financial control across departments. This branch adheres to standards like the Governmental Accounting Standards Board, GASB. Government accounting adheres to specific regulatory frameworks that guide how financial data is reported. In many countries, this includes standards set by the GASB or equivalent bodies, promoting consistency and comparability. These rules help governments maintain credibility in their financial reports and audit results. Locally, agencies might follow guidance from the DBM or COA to meet Philippine public accounting requirements. Adherence to standards ensures uniformity even across diverse government institutions. It plays a critical role in reporting how tax money is spent and ensuring trust in public institutions. Citizens deserve to know how their contributions are used to fund public services and development projects. Government accounting provides transparency by detailing expenditures on areas like education, roads, healthcare, and disaster response. Regular reporting reinforces confidence in the system and reduces suspicion of corruption or mismanagement. It enables civic engagement by making financial data accessible and understandable. At its core, it's a tool for fostering democratic trust and participation. 4. Auditing. Auditing involves the independent examination and verification of financial records and operations. Auditing provides an unbiased review of a company's financial documentation and activities to ensure truthfulness and consistency. Independence is crucial. It allows auditors to objectively evaluate data without conflicts of interest. This process involves reviewing journal entries, transaction records, and financial systems. It aims to identify irregularities, omissions, or misstatements in financial reporting. In doing so, it strengthens trust between the organization and its stakeholders. It ensures that statements are fairly presented and comply with applicable standards. Auditors verify whether financial statements follow established principles such as GAAP or IFRS. Compliance ensures consistency across industries and geographical regions, making financial data more comparable and credible. Fair presentation means that the reports accurately reflect the company's actual financial condition. When standards are followed, users can make informed decisions with confidence. Auditing serves as a guardrail for ethical and transparent reporting. Auditors assess internal controls, detect fraud, and evaluate risk. An essential part of auditing is evaluating the systems in place to prevent errors, fraud, and inefficiencies. Strong internal controls reduce the risk of manipulation and ensure operational reliability. Auditors also investigate signs of fraud and assess the likelihood and impact of financial risks. Their findings may lead to improved security measures or policy changes. This makes auditing a proactive tool for safeguarding organizational assets. This branch includes both internal auditing for operational efficiency and external auditing for assurance to outsiders. Internal auditing focuses on improving operations, minimizing waste, and ensuring compliance from within. It serves management directly by identifying areas for refinement and risk reduction. External auditing, on the other hand, is conducted by independent professionals and targets external parties such as investors, lenders, and regulators. Its goal is to provide assurance that the financial statements are reliable. Together, both types offer a 360-degree view of financial integrity. The ultimate goal is integrity and reliability in financial reporting. At its core, auditing champions ethical financial behavior and open disclosure. Accurate audits contribute to credible reputations and stronger stakeholder relationships. They help prevent financial scandals and maintain investor confidence. Reliable reporting is essential not only for business continuity but also for long-term sustainability. Auditing is, therefore, not just a checkpoint, it's a pillar of organizational honesty and resilience. 5. Cost accounting. Cost accounting determines the actual cost of producing goods or delivering services. Cost accounting gives managers a precise picture of how much it really costs to produce a product or provide a service. This includes not just obvious expenses like raw materials, but hidden costs too. Accurately identifying total cost is essential for setting profitable yet competitive prices. It also helps determine whether a business is operating efficiently or overspending in certain areas. By calculating true costs, companies can make smarter, data-driven decisions. It tracks direct and indirect expenses, like materials, labor, and overhead, and evaluates cost behavior. Understanding cost behavior begins by categorizing expenses into direct and indirect. Direct costs are easy to trace, like wages for factory workers or ingredients in a meal, while indirect costs such as rent and electricity require thoughtful allocation. Cost accounting ensures nothing is overlooked, giving full visibility into resource consumption. This breakdown helps identify high-cost areas and opportunities for savings. Accurate tracking enhances transparency and boosts operational control. Managers use this data to price products, control expenses, and improve efficiency. The cost data gathered supports essential management decisions, especially in pricing strategy. It reveals how much profit can be made from each sale and whether operations are financially sustainable. Managers use these insights to cut unnecessary costs and streamline production processes. It also helps pinpoint inefficiencies and prioritize areas for improvement. Ultimately, cost accounting turns expense tracking into a tool for continuous growth. Techniques include job order costing, process costing, and activity-based costing. Different costing methods are used depending on the nature of the product or service. Job order costing suits customized products, while process costing fits mass production like bottled drinks or textiles. Activity-based costing assigns costs based on actual resource use, offering a more accurate and fair allocation. Each technique gives unique insights into operations, helping organizations choose the one that best suits their workflow. These methods make cost accounting adaptable to diverse industry needs. It's essential in manufacturing, but also valuable across industries. While cost accounting is a staple in factories and production plants, its value extends beyond manufacturing. Service industries use it to evaluate staffing and equipment usage, while nonprofits apply it to manage program budgets. Healthcare providers rely on cost data to price treatments and manage departmental spending. Even education and hospitality benefit from cost analysis to optimize operations. It's a versatile tool that strengthens financial understanding across sectors. 6. Tax accounting. Tax accounting centers around the preparation and analysis of tax returns and strategies for compliance. Tax accounting revolves around ensuring that individuals and organizations accurately prepare and submit tax documents to the appropriate authorities. This involves computing income, deductions, credits, and liabilities based on legal provisions. It also includes reviewing supporting documents to verify figures and avoid penalties. Compliance means following deadlines, formats, and regulations as set by law. With proper tax accounting, organizations maintain good standing and avoid legal trouble. It deals with laws and regulations imposed by tax authorities like the BIR. Tax accountants must stay informed about regulations issued by entities like the Bureau of Internal Revenue (BIR) in the Philippines. These laws can vary depending on business type, location, income levels, and industry. Practitioners apply these laws to ensure that tax positions are legally defensible and ethically sound. Updates, such as new exemptions or revised rates, can significantly affect financial decisions. Navigating these complexities requires precision, vigilance, and continued learning. Practitioners compute liabilities, optimize tax positions, and ensure timely filings. Determining the correct amount of tax owed is a central responsibility, often involving multiple computations and adjustments. But beyond compliance, tax accountants also provide strategic advice to minimize tax legally, such as through allowable deductions or incentives. This is not about evasion, but ethical planning that aligns business practices with tax benefits. Strategies may differ for corporations versus self-employed individuals. The aim is to balance efficiency with integrity in every financial move. This branch requires staying updated on ever-changing legislation and rulings. Tax laws evolve frequently, shaped by national budgets, policy changes, and economic shifts. Being outdated in tax knowledge can lead to incorrect filings, missed opportunities, or compliance issues. Professionals must monitor legislative bulletins, revenue memoranda, and tax rulings, many of which come with detailed technical interpretations. Tax education doesn't end in school, it's a lifelong pursuit of staying current and adaptable. This agility sets great tax professionals apart from the rest. It balances legal obligation with strategic planning to minimize tax burdens ethically. Tax accounting isn't just about following rules, it's about navigating them wisely. Businesses want to reduce costs, and tax burdens can be one of the heaviest if not managed thoughtfully. Strategic planning might include choosing the right business structure, timing of purchases, or investment in government incentivized programs. All of this must remain within the boundaries of legality and ethics. When done well, tax accounting becomes a vital lever for financial sustainability. 7. Education accounting. Education accounting helps schools manage budgets, allocate resources, and track funding across departments. It's essential for ensuring that tuition fees, government subsidies, and donations are properly recorded and utilized. By maintaining financial discipline, institutions can focus on academic excellence without compromising sustainability. Whether handling payroll or monitoring operating expenses, accuracy is key. It monitors tuition revenue, grants, payroll, and operational costs. From student payments to faculty salaries, education accounting covers a wide range of transactions. Each revenue stream, whether public or private, is carefully logged to match expenses like maintenance, scholarships, and research support. Payroll involves managing timely compensation and benefits for academic and non-academic staff. Grants are especially significant for programs and innovation, often requiring separate tracking. This monitoring ensures that every peso contributes directly to educational goals. This branch must align with both educational policies and fiscal discipline. Schools and universities must make strategic choices about where to invest, whether in new facilities, updated curriculum, or advanced technologies. Education accounting provides the financial data needed to make these decisions wisely. It encourages collaboration between finance officers and educational leaders to align budget with mission. This balance ensures that learning thrives without financial strain. Reports may be tailored for boards, donors, or government agencies. Institutions rely on accurate reports to demonstrate financial health and credibility. These stakeholders, ranging from board trustees to external auditors, use financial statements to assess compliance, progress, and opportunities. Reports may also be required for grants, audits, or accreditation, each with its own standards and expectations. Transparency fosters trust, which is vital for continued support and reputation. It ensures that academic goals are met while maintaining financial sustainability. With fluctuating enrollments, shifting regulations, and limited resources, schools need to be resilient. Education accounting helps anticipate financial risks and build strategies to navigate challenges. It supports long-term planning for growth, innovation, and inclusive learning. Oversight isn't just about control, it's about enabling possibility. 8. Research accounting. Research accounting handles the financial tracking and management of funded research projects. Research accounting ensures that funds received for specific studies, often from grants, agencies, or donors, are allocated properly. It tracks expenses tied to materials, personnel, travel, and data collection within research budgets. This financial oversight enables research teams to focus on their inquiry while staying fiscally responsible. Transparency is especially important when handling public or international funding. It serves both scientific integrity and financial discipline. It involves budgeting, grant compliance, and reporting to sponsors and academic institutions. Before any project begins, research accountants help develop detailed budgets that outline expected costs and timelines. As the project progresses, they monitor spending against the approved budget and flag any variances. Sponsors, like government agencies or philanthropic foundations, often require precise reports showing how their funds are used. Accurate and timely reporting helps maintain trust and eligibility for future funding. It's a blend of financial stewardship and partnership building. Precision and transparency are vital since funds often come from government or private grants. Every funding source comes with its own rules, whether it's about allowable costs, documentation standards, or reporting frequency. Research accountants must navigate these conditions carefully to avoid breaches or disqualification. They also adhere to institutional financial protocols, ensuring consistency across departments and projects. Compliance isn't just bureaucratic, it safeguards credibility and protects institutional reputation. It's where ethics and accountability meet administration. It supports ethical stewardship of research money and enables impactful innovation. By handling the administrative aspects of research funding, accountants free scientists and scholars to concentrate on intellectual pursuits. They offer guidance on spending decisions that align with project goals and funding rules. This partnership allows research to progress smoothly without financial disruptions. Strong financial support systems can even accelerate innovation and strengthen competitive advantage. In this way, accounting becomes an invisible backbone of discovery. This branch bridges technical creativity with financial oversight. Research projects often span multiple departments, universities, or even countries. Research accountants play a key role in coordinating financial workflows across these stakeholders. They facilitate transparency, joint reporting, and shared accountability, especially in collaborative grants. Their role becomes even more critical in multidisciplinary studies that mix fields like science, technology, and education. Effective collaboration depends not just on ideas, but on aligned finances. More branches of accounting. The branches we've explored are financial, management, government, auditing, tax, cost, education, and research are foundational, but not exhaustive. Accounting continues to evolve, adapting to new sectors, technologies, and societal needs. Many specialized branches exist to serve distinct industries or functions, reflecting the profession's versatility and depth. Exploring these branches can open doors to emerging careers and insights into how accounting supports global development. Here are 5 more branches worth knowing. Forensic accounting investigates financial crimes and disputes such as fraud, embezzlement, and litigation support. It blends investigative skills with financial analysis to uncover fraud, misconduct, or legal breaches. These professionals are often called upon during disputes, criminal cases, or business litigation. They trace hidden assets, reconstruct financial histories, and support legal proceedings with evidence-based findings. Their work demands precision, skepticism, and a strong grasp of law and ethics. In courtrooms and corporate audits alike, forensic accountants bring clarity to financial mysteries. Project accounting tracks costs, revenues, and progress within specific projects to ensure accountability and success. It tracks financial activity tied to specific projects, ensuring they stay within budget and timeline. It monitors costs, revenues, and performance metrics across various phases, helping stakeholders evaluate progress and profitability. This branch is critical in industries like construction, consulting, and IT development, where each project has unique financial dynamics. It supports agile adjustments and transparent billing practices. Ultimately, it enables teams to balance creativity with fiscal discipline. Healthcare accounting manages complex finances in hospitals and clinics, including billing, insurance, and departmental budgets. It manages complex and often fragmented financial systems within clinics, hospitals, and health agencies. It involves patient billing, insurance claims, medical supplies, payroll, and departmental budgeting. The stakes are high, financial missteps can affect care delivery or policy compliance. With constant regulatory changes and varied payment models, this branch demands adaptability and sharp attention to detail. It ensures that medical institutions remain fiscally sound while providing life-saving services. Construction accounting handles job costing, progress billing, and contractor compliance in the building and engineering sectors. It specializes in handling finances for building and infrastructure projects, which often spend months or years. It includes job costing, progress billing, retainage tracking, and compliance with contract terms. Project managers rely on this branch to manage subcontractor payments and inventory usage across multiple sites. It must account for weather delays, material price fluctuations, and regulatory requirements. In a high-risk, high-budget field, accurate construction accounting keeps projects grounded. You've explored the building blocks of accounting, but true understanding goes beyond memorization. It lives in how we think, relate, and act. Use this reflection space to challenge yourself. What branch of accounting will you choose to carry forward? What questions still linger? Just like many of you today, I once sat with the same assignment, reflecting on how the different branches of accounting connect to real life. Back then, I spent an entire day in the library, flipping through books, because unlike today, the internet wasn't as accessible at the time. I wanted to understand how each branch worked and how it shaped the world beyond textbooks. It wasn't just about answering questions, it became a moment of deeper learning and personal insight. So before we wrap up, I'd love to share the answers I came up with during that journey. Who knows? Maybe something in my reflection will spark fresh ideas or help you see accounting in a new way.
From the books to the boardroom, we make it bounce. Each branch of accounting's got that real world ounce. We're not just counting money, we're counting impact. Let's go! Financial accounting tells the biz tale with statements and standards that always prevail. Cash flow, equity, income declared. Investors decide cause the numbers are shared. Management accounting runs deep in the plan, forecasting the goals with the budget in hand. It's internal intel for decisions ahead, with KPIs guiding where strategies tread. We count it up, branches side by side. Each one's a guide for the company ride. From finance to management, clear and true. Accounting shows what the leaders do. Government accounting tracks taxes and spend, ensuring public trust from beginning to end. With COA and GASB keeping things tight, budgets and audits in the people's light. Cost accounting breaks down the price, from labor and tools to every device. It tracks the expense, controls the plan. Efficiency grows where costing began. We count it up, branches side by side. Each one's a guide for the company ride. From government records to cost and flow, accounting makes the progress show. Tax accounting knows what the law demands, filing and planning with steady hands. It's fair rules and legal finesse, ethical moves so you pay no excess. Auditing sharp with its risky tech lens, checking the controls through financial defense. Internal or external, both keep it right. Truth in the numbers, audit spotlight. We count it up, branches side by side. From ethics to systems, it's worldwide. Accounting connects what the leaders see. Decisions, trust, and strategy.
Before you move on to your next task, take a moment to truly reflect. This isn't just about answering questions, it's about discovering how accounting fits into your thinking, your values, and your future. Every response is a mirror showing you what matters most and where you can grow. Whether you feel confident or curious, your thoughts are valid and worth exploring. So breathe, revisit your ideas, and let your reflection speak with clarity and heart.